All right, we're now in our third consecutive day of rally, and we haven't seen that in quite a long time. So, certainly an optimistic sign to see this. How did we go from so bearish to so bullish? Well, it seems like the market had baked in what the Fed was going to do. We expected what the Fed was going to do, but there was still some lingering bearishness. There was still a large swath of the market that wanted to sell everything, was jamming those orders in, was fearful of what could happen, said rates are going to rise, Ukraine, Russia, therefore I got to sell. So we got what I thought was a relatively dovish Fed. I'm not going to say, they were stimulating, but I thought, optimistic on the jobs market. I would say that was a relatively dovish Fed. I, obviously have been an inflation bull. I'm a big fan of Bitcoin, gold, etc. But I think while inflation may occur, and that actually may be good for stocks, that the Fed is going to execute for now, for the foreseeable future, looks like they're going to execute a soft landing. I don't think we're going to experience a Fed-induced recession in the near term. Obviously, in the very distant future, or even just distant future, things can change. But that's not now. Now, growth is rising quite significantly. I have many positions up yesterday, 10%, today close to 10%, 6, 7, 8%. What's up with that? That shouldn't be the case. Are we in an over-exuberant market? I'm saying no for now. However, we definitely should not let this situation get out of hand. We shouldn't have any more GameStops. That should not be occurring going forward. This should be a market of realism. But let me tell you why some of these growth stocks moving is actually totally okay. Many of these companies, some I talk about on this channel a lot, Editas, Jumia, Smile Direct Club, Virgin Galactic, CRISPR Therapeutics, etc., have just been selling off for the last year. And obviously, over a year ago, they were probably a little expensive. And at that time, I sold a lot of them. Editas is one of my largest positions. Jumia is one of my largest positions. It was one of my largest positions in 2020. Had it up until January 2021. I actually sold virtually all of those positions. And in something like Editas, wrote call options out against an existing position. So really, it was taking that down when it got too exuberant. But I think the inverse has happened. Editas, for example, is leading what will be the next revolution in healthcare. The ability to edit genes and cure all genetic disease. Way more than that. Obviously that's basically everything. But just a very encompassing technology. Trading for less than $1 billion. Also, which is below its pre-pandemic levels. Below its pre-pandemic levels. We just have, and this technology is the CRISPR technology, which Editas works on, was the basis of the mRNA vaccines. It's trading below pre-pandemic levels, okay? So maybe we had some over-exuberance a little over a year ago. It seems to me like we had some over-pessimism now, leading into this. So for the past few days, for today, for a couple more days, some tremendous growth moves I don't think is out of the question. What we can't see, and what I'm happy about seeing right now, is stuff like GameStop moving all over the place. Now down double digits today after earnings. Good after earnings. And shitcoins. Overhyped NFTs. Obviously CryptoPunks can be a thing. Bored Apes can be a thing. But for every single NFT that gets launched, or obviously a lot of them, selling 10,000 items at $1,000, that is quite a lot. Takes a lot of work to be able to do something like that. To sell even just 10,000 items at $10 takes a whole lot of work. So I would be a little more skeptical about those aspects of the market. We have to watch out for the over-exuberance in the market. And I think the presence of pessimism, the presence of rising rates, is going to prevent that from happening. So let's not get too uber bullish right now. Let's continue to focus on price, continue to focus on valuation. And if the Fed can stay the course that it is on right now, continue to communicate the way that it is right now, and the market can project and adjust for what the Fed is going to do, and it doesn't get surprised, we can have a calm market and avoid any more major pain. So we will see what happens. I think stocks are good things to own. They produce cash. Cash is trash, particularly in this environment. So we have to certainly welcome stocks. We should not be afraid of them. However, there are stocks to be afraid of, and we certainly have to avoid those ones. They're pretty easy to fund, very expensive, and while a company like Editas doesn't produce money, we can certainly extrapolate the money they can produce and assign it an appropriate valuation. How can we do that? Well, ability to cure all genetic disease, they're doing it successfully. So while they aren't addressing and making money now, addressing every customer out there and not necessarily making money now, if we do our homework and the fundamentals of the product, we can come at a level of conviction. I would suggest doing this fundamental analysis and finding stocks that you have a high level of conviction around the product. I happen to have a high level of conviction around Editas' product. So give me the benefit of the doubt for this explanation. In 10 years, I think a conservative valuation, assuming they can execute on the product, is a $10 billion valuation for a company that can cure all genetic disease and has done so already, or at least the principles of doing so, both in humans and in animals. In humans, note that. $10 billion in 10 years. Right now, it is roughly $1 billion after yesterday and today's move. That is annualized from 1 billion to 10 billion, roughly, because, obviously debate, well, when do you start the 1 year, whatever, close enough to a 100% return per year based on today's valuation for the next 10 years. I will take that return. I will take that 10x of my money over the next 10 years. I hope that makes sense and is not misleading. If it is, feel free to ask questions. I'm happy to engage and answer questions. Just to remind you, I am Series 65 certified, so I can answer financial advice questions, and I do so for free. So feel free to ask questions, and until next time, peace out.